Australia could miss out on significant revenue from US multinational companies operating in Australia after the US president struck a G7 deal to exempt America from a worldwide corporate tax floor. Business reporter Nassim Kardem is here to explain more. Hi Nassim. So what was the G7 deal meant to do?
Hi, Ros. Well, 140 countries had signed up to this OECD plan for a global minimum tax rate. So this was in 2021. There had been some discussion about whether we set that global minimum tax rate at 30% or lower. And ultimately, these countries agreed that it would be a 15% tax rate. And that would ensure that basically if US or all multinationals that do business in Australia, if they're paying below that 15% tax rate, then they would be subject to a top-up tax. And now that is now all under threat because the US multinationals have now become exempt from it.
So how much revenue could Australia lose?
So Australia could lose significant revenue. It's unclear exactly how much, but when the federal legislation was put together to give effect to this, it was about $370 million in tax receipts that they estimated over 5 years, and more than $100 million in actual payments.
So is this plan or deal now dead, Nassim, and is there any other way Australia can collect more tax?
Yes, unfortunately, in terms of US companies, they are going to get preferential tax treatment under this deal. So for Australia, the thing that they can do now is go to the via the UN Tax Convention. Now, this UN Tax Convention is a new thing. It's looking at not just issues of tax avoidance, but also tax evasion, harmful tax practices. And that's something that Australia could look at joining in the fight to collect more tax from multinationals.